Seconds. Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. Today I'm joined by Daniel Major, Goviex Uranium CEO, to discuss news that just came out, and Daniel will give us an update on other company developments. Daniel, welcome back to my show.
Thank you very much, and thanks for the invite.
Thanks. Let's kick off with the headlines. Your company announced substantial increase of open pit mineral resources at Mutanga in Zambia, and I see that measured and indicated resources nearly tripled. That is phenomenal. Please give us more details about this great achievement.
Yeah, as you know, we're currently taking ourselves through the feasibility study. We committed to a fairly substantial drilling program in 2021 and 2022, predominantly focused on the Dibwe East deposit, which was about 50% of our resource and all in the inferred category. And so we've done that drilling. What is key is that, as you say, from a in-pit resort constrained deposit, we've had a substantial increase, not only in the total amount of resource that we've got, more importantly, a conversion to 75% of our total resources in M&I. So that M&I can go into the feasibility study. We've seen the grade overall go up, which is positive as well. And obviously, from an economics point of view, hopefully that plays through onto the cost side of it. And I think the other exciting thing that comes out of this, when we look at our in-pit resources, we can clearly see areas again that we can specifically go in and target with the drill. So we'd already budgeted for some drilling this year. We've changed the approach with that drilling, and we're now infilling those extra areas to bring more material through into M&I to increase the potential for the ongoing feasibility study. So a good result overall on our project.
Definitely. Can you please expand a little bit on your answer? What this means about project economics and the PEA?
Well, when we did the PEA, we did everything at a $50 price for the pits. You're going from the PEA to the FS, you can't use the inferred resources. So we have to make sure those inferred resources are converted into M&I, which is hence why the drilling is here. And I think that's also exciting, is that when we look at a $50 pit, we've constrained at a $70 pit for the MRE, the mineral resource estimate. And in fact, $70 is not that far from where the current price is. But if you look at a $50, we've even got that increase there as well. So, if you compared that to the, 30 million pounds that was previously in the PEA, that's up to 34 million pounds now. So a big step up there. Grade has gone up there. So, this is underpinning that conversion of resource on inferred to indicated. It's showing that there's a good transfer through to the FS. So all of the pounds that we need to have for the production targeting there are there, and actually more, and potentially we can add to that. And of course, higher grade generally means slightly lower cost. So we're hoping that comes through. Obviously, the PEA was done back in 2017, so we will have some inflation to deal with. And hopefully this counters that inflation impact that's there as well. So yeah, the guys have done a great job on this. It's a very robust piece of work. As I said, the exciting part for us as well now is there's still more to be done, and not for very much work. So we're currently doing that infill drilling now. As we've shown, there's a couple of images in the press release, which, very obviously, you can see the blue color in the press release that says, put a hole in there, you convert to indicated. So, and it's already in the budget. So there's no increase in budget for that as well. So the feasibility study just carries on.
Is this resource still open in few directions?
Yes, it is. We can see still outside of the open pit. I mean, and again, on some of the sections, there's still resource there to go and be drilled. But I think at this stage, it's more about getting this project into a cash flowing project through the feasibility study. Once it's up and running, then a lot of that resource expansion can just be done feeding the mill. So, that's also another step forward for the future.
Okay, but what about the plans for this project? What do you plan to do in the next 12 months?
In the next 12 months, it's just the feasibility study. So we've already got metallurgical test work going on in Zambia. They've done the initial bottle roll test, which has given up no surprises. In fact, it shows it's a very clean mineral resource, pretty well just uranium and silica with nothing really nasty in it. The initial recoveries are kind of matching what we saw in the PEA and acid consumptions. Now we're going to go into 2-meter column test work. That will feed into the engineering work. There's a lot of work going on site already on things like geotech, hydro, guys doing infrastructure surveys. The ESIA is continuing to update as well. So, as I said before, about this time next year, we should have completed all that work and be able to issue an FS for this project. And then depending on, where the market sits, we'll then look at the financing options for it.
Sounds very exciting. Great stuff, Daniel. Can you give our viewers an update on Maduela as well? What is going on there at the moment? Also, any news on project financing? Are you getting closer to?
No, we're definitely getting closer. I think what needs to be made clear is that, as I've said in other interviews, a lot of the potential lenders on this are government related, whether they're export credit agencies or DFIs. And I think we have to recognize that they just take longer to get there. But the one thing about ECAs and DFIs is that once they get there, they're very sticky money. They've had to go through quite a reasonable amount of work to make a decision, and they don't tend to change their decisions. But we have, I've been talking about the one DFI. We're now, in good communication with them. So we are expecting something to come from them. But, no guarantee until we've got an LOI. But, fingers crossed and all of that. It's looking positive.
Great. Can you give us some time frames about potential talks about offtake agreements? I know you said that it will come later, but can you give us approximate time frame?
It'll tie very much to the financing. And once I get that DFI and the full package there, then we'll be very much more aggressive with the off-takers. My uranium sales guy is on his way at the moment to DC for the annual NEI conference that's there. He's got meetings with all the North American guys. He'll continue those conversations about offtake. It's not as though we're not talking. We always are. But it's trying to ascertain the right time to go off market with them. And that's getting very close. And certainly when we can show a full debt package, that is the point that we become a lot more aggressive on where we are. So again, that's getting a lot closer. But, as I say, communication is ongoing all the time with the off-takers, both in Europe and in North America, finding the right point to do it.
You mentioned off-takers. Can you expand a little bit on their sentiment, on their view of things? How are they positioned at this moment?
Yeah, I mean, there's nothing really new that hasn't been happening this year. I mean, obviously, a lot of the issue for them has been this issue of the Russian supply material. I mean, even recently, there was another ship embargoed trying to get out of St. Petersburg. So that crisis, where do you get your material from, continues to be a big issue. That ability to replace your enriched product has continued, but obviously with Urenco recently announcing an expansion on their US operations, Convidine gradually getting up and running, that should help ease that pressure on the utilities of where they get their enriched products through. But that whole supply line still needs uranium and still needs to be fed. And, I think we've seen a lot of that beginning of this year. If you looked at the term contracts that were being signed, most of it was in Europe. There was very little out of the US under term contracts, the reporting from UXC. So, certainly the commentary from people like Trade Tech UXC is very much, we've got the WNA in September, expect things to kick off on that and into September, October, after we go through the summer break.
Do you still see prices declining? I mean, project-related prices for shipping cost, drilling equipment. I mean that for Maduela for future production.
Well, we'll wait to see at the end of the day. But yes, I mean, some of the anecdotal comment that I've had from suppliers who've come back to us independently and said, look, this particular product just want to highlight to you that shipping costs that we quoted relative to what we can do that shipping on are considerably down. All of our capital that we put in, we asked the suppliers to quote it delivered to Arlet. And that was back in May of last year. So yes, we are expecting some of those changes to come through, and some of the major consumables have dropped as well in the open market. So yes, I do. We've obviously, got to make it all happen yet, though.
And how are things in Niger? Have you met with any government people recently?
In June, I met with the mines minister, the finance minister, and the president. Still all very supportive. They're very keen to see another uranium mine get up and going. It's good for the country as a whole, but more importantly, it's very good for the region, particularly at the town of Arlet, to create the jobs and go with that. So yeah, a lot of support here. We've been there, and it's recognized. We've been in Niger since 2007.
Yeah.
We've stuck out the hard time of the difficult uranium market. We've committed continually to our CSR programs. We fought our way through, and that stamina has been recognized as well.
Yeah, definitely. What about Falea project? I saw the recent you published news that this deal is not going to happen. So what is the company's plans to going forward with this project?
Yeah, I mean, the first thing is we have to get the reissuance of the Falea license. As you saw, structured into two parts, where Africa Energy are going to pay us in two tranches. The second tranche on the reissuance of the Falea license. So that's our first task, is get the Falea license reissued back to us. It times out in August. We still hold it, but in August it times out and we have to have it reissued. Once that is done, then we will obviously strategically look at it and see where Mali is at the time as a country, and then take our view forward. But I mean, I think fundamentally the rationale still remains the rationale, which we are focused on Madauela and we're focused on Mutanga and the development of those projects. And we really don't want to be spending a lot of money there, and until we can actually clearly see there's a strategic benefit to it. But we will go through the process. I think it's a good thing to get that license back and figure out what to do next.
Daniel, was ever a sale of Mutanga on the table for the company?
Has it ever been on the table? Look, I have been always considering at any point with the board, if somebody comes in and says to us, hey, man, we'll pay you a very large amount of money to take Mutanga off your hands, we would obviously have to look at how the company is being valued at the time, whether from a logical NAV point of view, that makes sense. And, and strategically, does it make sense? I mean, it would depend on the kind of deal. I mean, if somebody walked in and offered us a couple of $100 million of cash, then great, we could take that to help fund Madauela. I mean, if somebody came in and just offered us shares in a small company, we'd probably turn around and say, no, it makes no sense. We don't get any liquidity out of it. We'll stick with what we've got.
Yeah, it makes sense. What do you expect next for the uranium equities?
Up. Simple term. Up. I mean,
in the short term.
Short answer for a change from me. I mean, look, you can see that the uranium price continues to step up. The uranium price is stabilizing at higher levels all the time. As we said, a lot of the work has been focused on the EUP market. I think you are now going to see another step back into the U308 market. I think, and I agree with the trade techs and the UXCs, that the third and fourth quarters are going to see uranium price jump. And obviously sentiment will come back to the uranium stocks on the back of that. We cannot keep an industry running long term at these uranium prices. We need higher uranium prices across the board. As we've talked before, there's you've got a supply gap already. You've got a massive decline in secondary due to come through very soon, going from like 26 this year down to, by the end of the decade, 3 to 4 million pounds. That's two mines that have got to come in from somewhere, big mines that have got to come from somewhere just to replace that. You've got Cigar Lake towards the end of the decade. You've got Somalia coming towards the end, and even Kazatomprom supply current forecast production declines without new production being added. they all need higher prices to justify new projects. So yeah, I think there's a lot of upside still for our sector.
Definitely. Same question for long-term agreements. Do you see them speeding up in the next 12 months?
Yes, I do. I think across the board, as prices go higher, the utilities are incentivized to start locking in their risk. I mean, that's what contracts are all about. They're all about risk protection. No different from us as domestic house owners. Do we lock in our mortgage rates at fixed rates, or do we just go with the variable rate? Do we lock in our home energy prices at fixed rate, or accept the variable rate? There's no difference between us and a utilities doing exactly the same thing, which is the biggest risk he's got. The difference being on the uranium supply is, there's so little trades in the spot market that if you haven't locked it in, then you might be struggling to find what you need in the spot market as well. So, same rationale applies. And for the company's point of view, you're trying to lock in guarantees, but you want the upside as well. And it's finding that risk balance between the two.
How do you see China and Kazatomprom relationship in the future?
Look, it's already a close relationship, clearly. The restrictions that have been imposed on shipping uranium from St. Petersburg have obviously forced a lot of material to go eastwards from Kazakhstan. And there's a rail link all the way through, so why would it not? But I think, talking to the Chinese companies as well, looking at where their forward demand is going to come from the growth in nuclear generation, they also do not want to have all of their lack of diversification with a lot of material coming out of Kazakhstan. While everything is good now, who's to say where it is in the future? And if you're relying on, 4 times increase in your production of power out of nuclear over the next 20 years, you need to know you can get material from anywhere in the world. And that's where countries like, continents like Africa can see a real benefit going forward, because, while the Chinese can technically buy uranium from Australia and from Canada, exceedingly difficult to do the process. Technically they can, but it's exceedingly difficult, and they don't happen very often. Sorry. And so, yes, if you're having to get everything from Kazakhstan, you need an alternative supply source. And that alternative supply source has to be Africa to get your material from. And, you saw Rossing announce their expansion recently on phase 4 going out to 2036. But then it's finished. So, CNNC, who own that one, are going to have to find a replacement for it. Even Husev doesn't last forever.
Yeah, definitely. Daniel, can you please give us an update on your cash position at this moment for the Goviex? How much cash is in the
I won't give you where we are exactly, because of course we can only report what we have reported. But I mean, obviously we did that financing earlier in the year, put 15 Canadian in. Let's say we're doing what we can to limit the amount of expenditure, but while adding value with going through what we're doing. So, target is to make it last as long as possible. Target is to try and get it into next year.
Fair enough. Daniel, that brought us to my last question, and that is, what are the company's plans for the next, let's say, 3 or 4 years? Where do you see Goviex in 4 years?
In 4 years, hopefully, in 4 years from now, we have a production unit producing uranium out of Niger, and we're well advanced on either financing or starting the construction on Zambia at that point, and bringing that one alongside it. Where we go there strategically once we get to that point, I'll have to see what is happening around us. But certainly at the moment, the target is to get Madauela into production, and really it's that. Getting through this financing conversation, and I think the one point I would say, some people have looked at what's going on around us, but I mean, we have peers who are already in that process. And the fact that there are peers in Niger doing the financing ahead of us means that a lot of the learning curve for new lenders into Niger is getting dealt with. and it'll make it so much easier for us to come in second in the line as well. So hopefully that smooths our process. But yeah, we're about getting into production on our projects, and we really believe we can do it.
Okay, Daniel, thank you very much for this interview. I wish you luck going forward with your projects, and we will keep in touch.
Thank you very much.
Thank you.